Hi everybody, it's AJ speaking. This is a quick Tesla China sales trend update and overall market review. Numbers dropped in the last few hours. Tesla came in at 12,500 vehicles, and this is for the week ending August 31st. That brings the quarter to date total to 99,000 vehicles, as which you see up here, but also down here. This has been the third strongest week thus far in the quarter. We are right now at week 9, and there are 4 more weeks in this quarter. Full weeks, I should point out. So the current quarter is substantially ahead of both the first quarter and the second quarter after 9 weeks. You can see it down here. So the first quarter was at just under 70,000 units after 9 weeks, and the second quarter was just under 72,000 units. So the third quarter thus far significantly outperformed both of these prior quarters. However, we are still meaningfully below the third quarter of 2024, which was at just under 13,000 units, 113,000 units, and that implies a underperformance over the third quarter of last year of 14,000 units. In a percent, that means the current quarter is at roughly 88% of last year's third quarter. That percent has been quite consistent over the last couple of weeks. And what we can do is we can use this, let's call it consistent relative underperformance over last year's quarter to do a bit of forecasting. And I will put the calculations here on the right hand side. So let's start with the quarter to date numbers. So as we said, we are at 99,000 units. Last year, third quarter was at just under 113,000 units. This implies an underperformance of 12%, or expressed as a percent of last year, we are at 88%. In the next step, if we apply the 88% to the remaining 4 weeks of last year third quarter, we get to implied 60,000 additional units for this quarter, and that would imply 159,000 vehicle sales for the third quarter of this year. I estimated at the very beginning of this quarter 139,200 vehicles, but at that point we did not know about the Model Y L launch. That estimate was in the first week of June, so this would imply that I should increase my estimate by about 20,000 units. But there's more to it, so let's look at it, what this would imply in terms of weekly sales rate. That would be 15,000 units that Tesla would have to deliver over the next 4 weeks on average. However, to meet my beginning of quarter estimate of 139,000 vehicles, Tesla needs 40,000 additional vehicles over the next 4 weeks, and that would be on average 10,000 units. Since Tesla delivered for the last, 1, 2, 3, 4, 5, 6 weeks, slightly more or meaningfully more than, or significantly more than 10,000 units, my estimate is highly likely too conservative or too low. So what about the 15,000 unit sales rate to achieve 88% of last year third quarter, which is in line with quarter to date performance? So we can see in all of the prior quarters, the last 4 weeks tend to be overall significantly outperforming in the quarter. In part, this is driven by Tesla's delivery strategy, but also by the typically strong quarter-end sales push. So it appears quite likely Tesla can actually deliver that. And the other factor we have to consider is that the Model Y L deliveries are just about to hit or reach customers. And only upon handover of a vehicle, Tesla recognizes these vehicles. And since we are looking at insurance registrations, that means we have not yet seen the impact of the Model Y L, which is quite popular in China, based on search interest on China's most popular Auto platform. So that's why my current base case is Tesla will come in at around 160,000 vehicles, and in my next total global deliveries update, I will reflect that increase. But let's now move on and look at how the market overall has done. And for that, we look at the most important brands, and please note BYD's scale is broken to 1/3, because otherwise it would make the other players hard to read. These bars from top to bottom are ranked by total last 4 weeks total sales. Tesla ranks number 2, and the arrow shows you the latest week-on-week change. So most players are up, except for BYD. Lost a tiny bit, so there's not a huge decline here. NIO's Onvo brand, interestingly, is actually down by around, call it 10%. Zeekr down a little bit. Zeekr is part of Geely Group. So overall, a strong week for most players except BYD. But to get a better picture of what's going on in terms of the competitive situation, we need to zoom out a bit. And this is what this chart does. This chart shows you the trailing 13 weeks sales. So 13 weeks amounts to 91 days, and this is much better in line with a quarterly sales rate. And of course, BYD is still significantly number one. And please note this scale for BYD is broken. I just show BYD here for completeness. But here also the sales trend is still increasing. And is driven by BYD's fully electric vehicle sales, while BYD's hybrid electric vehicle sales see a significant decline. Tesla number 2, also significant upwards trends after the new Model Y transition, and I expect this trend to continue, as I said last time, driven by the Model YL launch. Leapmotor continues strong, now grew to the number 3rd largest player over the last 13 weeks, and replacing Aito, which used to see a very strong sales trend, but has flattened for the last couple of weeks. XPeng at number 5, also seeing a good growth in the trailing 13 weeks metric. And then Xiaomi is the big one this week. And if you remember last week, I expected that Xiaomi's sales trend was about to pick up significantly, driven by the U7 launch. U7 is sold out for 2025, so the increase in Xiaomi's sales trend is highly predictable, because at this point it's only about ramping and not about demand question, at least for the rest of 2025. And since a ramp curve, production ramp curve typically follows kind of an S-curve adoption, as it picks up, it tends to pick up more and more rapidly. And for that reason, I expect a quite violent growth rate in the trailing 12 months. So this will be quite exciting to watch. And then we see significant weakness in Li Auto, but at least the trailing 12-month sales trend now stabilized. The reason why Li Auto is underperforming so much is the main reason is Li Auto is mostly hybrid electric vehicles or range extended electric vehicles, which is the same thing basically. And these vehicles, although they used to be highly popular in 2023 and for most of 2024, they recently in the last couple of months lost a lot of consumer interest, as the Chinese consumer is increasingly moving to fully electric vehicles. So Li Auto's decline is therefore quite remarkable. You can see just a few months ago in May or as late as June, Li ranked number 3 in trailing 12 months sales, but has now lost 4 positions in the market. And this is why I always say the Chinese auto market is quite exciting, because big wins and big losses are often quite close together. And Li Auto is a perfect example of that. Losing 4 ranking positions in a matter of just 2-3 months is a huge drop. And then we get to NIO. So NIO traded in terms of total sales sideways for quite some time on a trailing 12 months basis, but recently picked up steam, and it was driven by a number of new vehicle launches. Most importantly, the launch of the L90, which is a larger SUV, but at an affordable price point. Aside from the Onvo vehicles, so the Onvo brand has the L90 just mentioned, but also the L60. L60 is basically targeting the Model Y, but at a significantly lower price point. And these 2 vehicles did quite well, as you can see in this Onvo sales trend, but they have been cannibalizing new branded vehicles, which come at a significantly higher price and therefore higher margin. Also interestingly, NIO has been aggressively discounting all vehicles that are not Onvo and Firefly, and recently launched, let's call it a hidden price cut, by upgrading certain battery configurations to the largest battery pack, while not changing the price. So NIO is about to report second quarter results just in the next probably 2 hours. So that's going to be quite interesting to see what's changed in NIO's financial after launching these new brands. Thank you very much for listening. See you next one. Bye.